Breakthrough Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there and welcome to the COB on this Wednesday afternoon. Nice to be here with you. I'm Nadine Blaney and I do have a guest host here with me, Jonathan Takadina from MPC Markets. We'll get there in just a moment. First, we will do our due diligence by taking a look at this market. Even though it's a bit painful to look at, the ASX has now fallen for 7 consecutive sessions. Inflation, as I'm sure you've heard, printed at its highest level today since September 2023. The RBA looks nailed on for another rate hike, yet there have been some dissenting voices. Anyway, that's the COB Australia Index. It's off by 0.3%. The S&P ASX 200 currently down by about 0.4%. We'll check in with that in just a tick. But as I was saying, that inflation read did come in hot. It's one of our key themes, and we had a number of discussions about it today. One coming from a stock-specific person, Henry Jennings. He said that he's not sure a hike in rates will do anything when it comes to some of the drivers being war in the Middle East, and he says it will just pile on misery after misery. That was in the call today, if you'd like to go listen to his wise words. Also, Amy Lomas, she is the chief economist at PwC. That interview I just got up online. She pushed back on that near universal consensus amongst the big 4 banks that we will see a hike next week, saying that it's not necessarily a foregone conclusion, noting that the trimmed mean came in at 3.3% on a quarterly basis, so below the 3.5% that was feared, and services inflation actually fell to 3.9%. From 3.9 to 3.6%. So you can listen to Amy Lomas's take on that inflation read online at ausbiz.com.au. Regardless, it was a really interesting market reaction. After 11:30, we actually saw the market lift. Now, as you saw on that chart, has fallen away since, but I suspect that's because we still do have a lot of risks on the horizon, and one being those big tech reports that start dropping in earnest tonight with that mag7 moment. I'll chat with Jonathan about that one. But let me run you through the sectors of the day. Utilities, so that old safe haven, or traditional safe haven, I should say, outperforming Origin, making up some lost ground after it downgraded Octopus Energy earlier in the week. AGL up by 2.6% as well. Now, getting to the energy space, really interesting development with the UAE withdrawing from OPEC Plus, but safe to say that the driver of these stocks primarily is the price of oil, and price of oil lifting yet again in Asian trade with this on again, off again situation in terms of the war in Iran and the ceasefire in Lebanon as well. Also this on again, off again opening of the Strait of Hormuz. Yeah, how is one to really get their head around that? Now, look, to the downside, I guess what was really weighing on the market today to a large extent was the healthcare stocks. Oh, actually, here's technology. Technology was a bit mixed, apologies. Let's get to the healthcare stocks now. And we did see some pressure coming through. Whew, what is going on here? Healthcare, one of the worst performing sectors. Let's get to some of these corporate stories then. I'm getting pushed along. I'm not quite sure why, but Woodside says it's beat on its operating revenue expectations and the share price has risen. ANZ has entered a binding agreement to acquire Worldline's 51% in payments joint venture ANZ Worldline. Media has risen to a 2.5-month high on that private equity takeover bid. And Codan, it was the stock of the day. It hit a record high on its earnings upgrade coming through for 2026. Meantime, G8 Education smashed, saying that it will suspend operations at 40 underperforming sites after reporting a sharp drop in enrollments. And I saw Arena REIT for one, putting out a release saying that it has not yet heard from G8 Education about the closure of any of the sites that it would be responsible for. So yeah, these things always have reverberations, don't they? We also had a number of quarterlies coming from the miners. Ramelius lifting its FY26 all-in sustaining cost guidance. And why? Higher diesel prices. So we're starting to see that coming through. Bellevue Gold reporting free cash flow, a record actually of $148 million. 29 Metals doing really well today, revising its 2026 guidance following geotechnical reviews at its mine. So, with no further ado, let's get some analysis with Jonathan Takadina. He's joining us from MPC Markets. Hello.
Hello.
Nice to see you.
Yeah, thanks for having me again.
Okay, so the market off by 0.4%, down 1.25% week to date. Surprising?
No, not surprising at all. I think it's a tale of two cities. USA is because of AI, money's flowing into that sector. Here in Australia, we have a looming fuel crisis, and I think the market's kind of just pricing that in. That obviously, we haven't seen the worst, in my opinion, of the fuel crisis hit Australia just yet, because we've got that buffer, either way, the market's kind of front running that, and that's why we see, what I call the widowmaker trade, where basically here in Australia we tend to go, well, the SPI or the Australian market's lagging Australia, so let's buy Australia, and to play catch up. Hasn't happened. We're basically leading to the way down, and the US is beating to its own drum at the moment. So that's the trade at the moment. Stay long US, stay short Australia.
Do you think anything could change tonight in that equation when we get these big blockbuster results coming through?
Yeah, I think we'll see more of the same. So if we're going to see a top in the market, it would actually be tonight in the earnings, or tomorrow morning our time. So we've got the mag7 reporting. If we see good numbers and like some profit taking in the price action, I think that could be a possible top. But I think underlying, if you look at the AI drive and people just using more compute and Anthropic coming up with their Mythos engine, it just looks like that AI trade is back on. You have a look at some of the secondary effects like uranium, natural gas generators, electricity grid. That whole build out, that whole sector, that it's going gangbusters, and it's kind of just paying no attention to what else is happening around the world in terms of the geopolitical risks. And it's just like, okay, I honestly think it has to be a massive miss for that momentum to reverse. So my call is that whatever they report, I think we'll see new highs in the mag7 again. So
it's really interesting, isn't it? Because, okay, that's your call for the mag7, big tech. We know the thematics that are driving that. But is there a disconnect between those companies and then the companies that are reflecting what is really going on in the US economy? And you can look to Domino's quarterly, and I'm not going to quiz you on those results, but they had the negative impact here on locally listed Domino's stocks because it's discretionary, input costs are rising. The US economy, it's, again, to use your phrase, a tale of two cities. You've got the haves and you got the have-nots. So in the reporting season, are we going to be selective in hooking onto those stories that we love and then ignoring, the bad ones that are a reflection of, the slowdown that's happening?
Yeah, absolutely. That's how the market is at the moment. It's just like it is so selective in its hearing. Like it picks out whatever it wants to see as a positive and just rallies on that. And I think that's what is driving those individual stocks. Obviously you still got the passive flows, and that's a big factor. But just generally, the mag7 or the AI trade is marching to its own beat at the moment. And as I said, it'll have to be a massive miss for that momentum to change. And if you look at the other side of the coin, obviously there's a lot of people hurting. Like the cost of living has just gone through the roof. I know the inflation. They say it's it's hot, but then it's the same thing. There's selective hearing there. It's like the market at 11:30 said, oh, there's a miss there or a weaker number in the monthlies. So let's rally on that. And then they go, hang on, 4.6 is still quite high. Yeah. And then you've got the market 50-50 on whether they hike or they won't next week for the RBA. So it is, as I said, this market is all about selective hearing, and you have to play it almost stock specific. It's very hard to follow the index at the moment and try and make money that way.
Well, energy stocks were higher today. Would you be trimming energy stocks?
No. So one thing I've been kind of cautious over the last few weeks, and that's probably because I keep listening to all of the energy analysts and all of the commodity analysts about how devastating this fuel shortage is going to be, or this energy shortage coming up. So, did you know that those very large oil tankers, they actually move at the speed of a bicycle? So if you're riding the bike, that's how long they take. So the last ships that actually filled up from the Middle East have kind of just hit their last ports now. And so that's why we haven't seen fuel shortages here in Australia. We haven't seen fuel shortages all around of Asia just yet. But I think you'll start to see that soon. And what that means is that, once people have to say ration fuel or actually have to think about, oh, hang on, the fuel's back up to high prices, I think you'll see the next sort of slide down in equities based on that. So I'm still fairly cautious. Equities at this stage, I think the AI trades, they're marching their own drum, but overall, I'm cautious equities. And no, I wouldn't take profit in energy at this stage. I think there's another spike coming.
Yeah, right. Okay. What is your action on gold? Because all through 2025 to start this year, you were definitely our go-to on gold.
Yeah.
So what?
And I've mentioned, I think probably about March to about September last year, like gold just went sideways for a good 6 months. It had that rise up I forget the actual levels, but basically it was sideways for quite a while. And I think we're going to see that for 6 months. So while I've mentioned this, while I am bullish long term because there is no solution to the debt problems out there, so I think that gold will continue higher. I think it's just basically found a new base here. So 4,500 will probably be the new baseline. Every time it gets near 4,800 or even near 5,000, I think, trim it. And then it goes sideways for a bit while it consolidates. And I think where you'll see the first movements is that if there's a solid price movement in the miners. And unfortunately, they're dealing with rising diesel fuel costs at the moment. So I think just choppy action. But I think we've got a new floor there in gold.
Okay, nice. Now, when it comes to what we heard from Codan today, which is stock of the day, again, don't need you to comment specifically on it. We'll get some analysis in just a moment. But point being, that was actually an earnings upgrade coming through. Whereas most people I hear are bracing themselves for a pretty punchy convention season, of which we are on the cusp of. Where do you sit?
Where do I sit? So with Codan, because it's in related to mining or some part of it, I've actually got. So we have a shared office. One of the other offices actually sells pumps towards the mining services, and they said, look, they see boom conditions for the next 3-4 years. So the mining capex cycle is in full swing. And obviously, with the even though gold has pulled back, it's still a new floor, and those miners are still printing cash. So same thing, selective hearing. If you're in the right sectors where money is still being poured into it, I think the reporting should be fine. If you're in, say, financial services, maybe in some healthcare or consumer discretionary, maybe not so. So again, selective hearing in earnings as well.
So are you still putting fresh money into those companies that have momentum behind them like Codan, or have you taken an approach that it's good to build up your cash reserves right now?
No, it's, as I'm a shorter term trader, I'm always like, okay, there's stocks that are saying no to the overall global macro and still rising, so there's still always trading opportunities within the space. But overall, anytime that as an example, like Newmont shot up to like 170, and I just trimmed some. And most people would be like, you're selling one of the best gold companies at the top end of the range. I'm like, because I'm not overall bullish, then I don't think it's going to break out. So just take some profits, buy back in, and that's kind of how I'm treating things. So anytime where there's an easy decision to be made, meaning that there's a profit, a stock's at the top end of the range, happy to take some off and redeploy.
Yeah, nice. Jonathan, good chat. Thank you so much. I guess you're almost ready to go home, as I'm sure many are as well. Look, it's been a rough 7 sessions there for the local market. The index continuing to be battered and bruised. The growth, as Jonathan was just saying, looks like it's happening offshore. We don't have a lot of sectors that have been moving this market higher, save for energy and I suppose materials, depending on the day. All right. Stock of the day, as we mentioned, was Codan. We'll get another view, so thanks to Jonathan for weighing in, with our experts Andrew Whiteland from DP Wealth Advisory and Henry Jennings from Markets Today.
17% today, so it's had a big run. It's fair to say that if you were picking two businesses at the moment that were going well, defence communication and metal detectors for gold with elevated gold prices, especially in Africa. Codan satisfies both of those, especially in the defence side of things, and we have seen the Zetron command and control portion of the communications business expected to deliver second half revenue broadly in line with the first half. So that's a good news there.
I won't stake my firstbborn on it, but I'm pretty sure we did.
Okay.
And it's obviously back then it was around $17, whereas today it's 40 odd. But all the foundation pieces are still in place. Return on equity back then was around 16-17%. It's now 24%. That profit margin is increasing as well. Lots to like about it. It's a buy.
From energy shocks to tech resets.
For more than 50 years, he's been guiding Australians in making smarter investment decisions. And now you can catch him on Ausbiz. Join Peter Switzer for an exclusive series packed with essential local and global insights that matter to your money.
Fortunes of Chemist Warehouse linked to Ozempic.
Oh my goodness, absolutely. It's driving majority of the sales.
My favorite company, what we mentioned, Technology One. They've basically proven to investors and to the rest of the sector what they need to do to get it revived.
Watch live on Ausbiz, Tuesdays 1 p.m, or catch up on demand and subscribe to the Switzer newsletter free. Visit switzer.com.au.
Market leaders, today we do have Codan Limited. It really shot it out of the ballpark, up by 15% to $42.08. Double buy if you missed it from my guests on the call today. You might want to take a listen to that entire episode. It was a cracker. We had a quarterly activities report coming from Nickel Industries, sending the share price higher to the tune of nearly 6%. Linus as well. It was featured on the call, actually. And just yesterday, we did see the Pentagon and some reports in the Wall Street Journal that did name Linus as a supplier for those rare earths needed by the Pentagon. So, yeah, some good publicity there. Yancoal up. I can't see any news, but doing all right. Alica Resources putting on 3.7% to $8.03 for those of you on your walk listening to this and can't see the numbers on the screen. All right, let's get to the laggards. So we've got Catalyst Metals. That's a pretty punchy fall. Percentage terms, 6.5%, bringing the price of the stock down to $5.64. It was $2 out with the quarterly, and obviously disappointed IDP Education, Hyperion X, Orabanda, and Pantoro, all on the list of losers. Let's get to the small to mid cap space. The winners here, Umedia, wow, up by 34% to $1.15 on that private equity takeover. I dare say, and this is just a guess, that we might be in the end of the era of having Umedia as a listed company. I don't think I'm going too far there. Vitrify Life Sciences up by 25% to $2.10. Now, those that, again, lagged the market, G8 Education, we talked about the warning it put out, closing down some of its sites, down by 29% to 17 cents per share. So one thing I meant to discuss with Jonathan Takadina, but didn't get a chance, was the fact that the FOMC is meeting and we will get a decision expected to hold. Still, though, any commentary from Federal Reserve Chairman Jerome Powell, we won't be saying that for much longer, will we? Will be interesting. Bank of Canada as well, expected to keep rates on hold. And there you go. Boy, I've got the morning crew in my mind. Good luck with Alphabet, Amazon, Meta, and Microsoft. I'm kidding. I'll come in and help, obviously. All right, let's get to what we're expecting here tomorrow. We do get import prices, private sector credit, quarterly updates still coming through. Woolworths on that list as well. But of course, there will be a lot of digestion still to when it comes to this inflation read that we got today. Annual inflation, the headline number, 4.6%, with fuel prices biting. Recession, a real risk. So what will that mean? How will that factor into the RBA's thinking? Of course, is worthwhile considering. And how it will impact the budget, or how the concern will continue to impact the budget. Look, I was chatting with Jonathan Takadina off air. It's really sad to say that, you know, some days you sort of lose track from hour to hour as to the latest coming on the war in Iran. Trump saying that he's unhappy with the latest peace proposal and that Iran is figuring out its leadership. So again, that will continue to be a watching brief, but it has caused stocks to retreat, not just here, but around the region as well. And with that in mind, let's take a final look at the market close today. And we do have, that is the CBO Australia Index, which has been closed for about 20 minutes. The S&P ASX 200 down by about 0.25% to 8,687. E-minis in the US, interestingly, looking pretty solid, up by about 0.5% for the NASDAQ, and the S&P 500 up by 0.2%. Of course, doesn't mean that's going to come to fruition. We did see a bit of selling on Wall Street last night, but yeah, we will be hanging out for those big tech results, hanging out for the aftermarket reaction as well, and we will be live to get you across it all, as well as that FOMC decision from 9:45. In the meantime, catch up with what you may have missed on ausbiz.com.au, and we'll see you tomorrow.